Currently, the crypto fear and greed index stands at 55, indicating a neutral market sentiment. This level suggests that traders are neither overly fearful nor greed-driven, which can often be a good point for cautious positioning. In the short term, this neutrality could lead to stable trading conditions. However, investors should watch for shifts that could signal upcoming volatility or trend changes. Overall, a balanced sentiment suggests potential for moderate movement. This encourages traders to stay alert but not panic or get overly bullish. OPEC Plus has tentatively agreed on another large oil supply increase for September, aiming to reclaim market share. While this mainly impacts the oil industry, it can influence inflation and energy prices globally. These changes, in turn, affect cryptocurrency markets indirectly. Depending on market perceptions, this could cause short-term volatility. In the medium to long term, it might support a stable macroeconomic environment for crypto adoption and investment. China plans to liquidate confiscated cryptocurrencies via Hong Kong exchanges. This move signals its strategy to dominate global digital asset markets. The approach could increase concerns about market manipulation and may exert downward pressure on cryptocurrency prices in the short term. However, it also highlights ongoing regulatory tensions worldwide. These tensions might deepen market volatility but could ultimately lead to clearer regulatory frameworks in the longer run. A significant Bitcoin whale moved 80,000 BTC from dormant wallets after 14 years, raising alarms about quantum computing threats. Such large movements can provoke short-term price swings, creating market uncertainty. While the move might be just strategic or precautionary, it underscores ongoing fears about security risks. This could potentially impact investor confidence in Bitcoin's long-term security and stability. Michael Saylor's MicroStrategy confirms it is doubling down on Bitcoin, emphasizing that they are not just hoarding, but actively building their business around the cryptocurrency. This strong institutional endorsement can boost market confidence and potentially support a bullish trend in the medium to long term. It signals institutional commitment and pushes mainstream adoption forward. U.S. companies are increasingly raising funds in Europe due to cheaper borrowing costs. This trend boosts U.S. corporate debt markets. It is positive for investors, as it can lead to increased stability and liquidity in the crypto ecosystem indirectly. Healthy corporate financing supports broader markets. Expect this trend to normalize market confidence and encourage more adoption of crypto-related financial products. Iran and Iraq are nearing a resolution over gas export disputes, which could help stabilize regional energy markets. While this is primarily geopolitical, stable energy supplies reduce global uncertainty and may benefit risk assets, including cryptocurrencies, over time. In the short term, the market might not react directly, but this is a positive sign for regional stability, supporting broader economic confidence. President Trump's push for aggressive rate cuts clashes with Fed Chair Powell's cautious stance. This geopolitical tension around monetary policy can cause volatility across all markets, including cryptocurrencies. Short-term uncertainty could increase. But if rate cuts push inflation higher, it might eventually boost demand for cryptocurrencies as a hedge in the longer term. A Bitcoin maximalist criticized XRP investors following a price decline below $3, calling XRP investors truly retarded. Such intra-crypto conflicts often generate negativity but may have limited long-term impact. Short-term, it could increase market polarization. Long-term, the dominant narratives will depend on broader adoption and utility rather than intra-community disputes. A leading lawyer explains SEC's Project Crypto initiative, aiming to modernize regulations and foster innovation. This regulatory push can clarify the legal landscape, potentially boosting institutional involvement and long-term growth. While short-term uncertainty persists as details unfold, the overall effect could be positive for market confidence over time. Today's crypto news covers the latest trends in Bitcoin, DeFi, NFTs, and regulation, providing a snapshot of market momentum. Staying informed helps traders make strategic decisions amid volatility. Regular updates like these help investors navigate short-term fluctuations and identify longer-term opportunities in this fast-evolving space. Coin Futures has emerged as a top crypto derivatives platform, offering fast, user-friendly trading experiences since summer 2025. This innovation can attract more traders looking for efficiency and accessibility. It may lead to increased market activity. In the longer term, platforms like this could contribute to greater liquidity and mainstream adoption of crypto trading.